You're listening to Uranium Spotlight on Tuesday, August 6, 2024. Brought to you by Pure Point Uranium Group, your exploration partner in Canada's Athabasca Basin. Amidst surging uranium demand, Pure Point's continuous 2024 exploration across their vast portfolio, backed by industry giants, underscores their focus on the next major discovery. And now your host, Chris Frostad.
This week on Uranium Spotlight, uranium prices hold steady. Kazatomprom surprises the street. Australia potentially missing its big uranium opportunity. Global reactor construction soars, and Cameco releases its Q2 results. Last week, the uranium spot and long-term prices both held their ground, with the spot closing on Friday unchanged at $82 US, and the long-term price closing out July unchanged at $79 US per pound U3O8. The uranium markets have exhibited a mix of quiet trading and slight fluctuations over the past few weeks, reflecting typical summer trading behaviors, but also hinting at emerging patterns as buyers and sellers adjust their strategies. In the spot market, activity remained low, with only 3 transactions confirmed last week, pushing the monthly total to 8, involving nearly 900,000 pounds of U3O8 equivalent. Conversely, the term market showed signs of revitalization. Interest from U.S. and non-U.S. utilities sparked a series of requests for proposals and off-market negotiations, indicating robust underlying demand. Notably, term pricing remained under upward pressure, with some offers reaching into the low $80 a pound, although the long-term U3O8 price held steady at $79 a pound. For investors tracking uranium equities and commodity markets, these dynamics suggest a cautious but potentially opportune environment. The contrast between the placid spot market and the more active term market highlights the strategic positioning of utilities and producers as they navigate supply uncertainties and anticipate future demand scenarios, particularly as new contracts and delivery periods approach. Kazatomprom, the world's largest uranium producer, has surprised the market with a significant upward revision of its 2024 production guidance. Earlier this year, the company had consistently signaled potential production shortfalls, and analysts widely expected these to materialize. However, after unexpectedly high output in the first half of 2024, nearly 24 million pounds, Kazatomprom now projects full-year production of between 49 and 51 million pounds, 2 to 4 million pounds higher than previous estimates. This increase caught many by surprise, given the earlier warnings of potential shortages due to various operational challenges. The company has also been selling uranium at an average price of $66.22 a pound, up 41% from last year, but still below current market prices, which recently reached $84.45 a pound for spot and $79 a pound for long-term contracts. This price lag is due to older contracts locked in at lower rates, although Kazatomprom's current portfolio is now aligned with the higher market prices. With producers now securing contracts at these elevated levels, revenue for uranium companies is likely to rise. Kazatomprom's stock, closing at $38 a share and valuing the company at $9.8 billion, reflects this positive outlook. The company's share price has ranged from between $27.65 and $47.60 over the past year. While primarily state-owned, a small percentage of shares trade on the London Stock Exchange. Uranium explorers in Australia are increasingly pushing for expanding mining permissions as the global energy transition accelerates and demand for uranium is expected to surge in the coming decade. Despite Australia holding a third of the world's uranium reserves, mining is currently allowed in only 2 of the country's 8 jurisdictions, Northern Territory and South Australia. The remaining 6 states, including resource-rich Western Australia, have imposed bans on uranium mining. In Western Australia, a 2017 ban was enacted with exceptions for 4 projects already under development, though none have yet to be operationalized. Currently, only 2 uranium mines are active in Australia, both located in South Australia, contributing approximately 9% of global uranium output. Peter Dutton, leader of Australia's Liberal opposition, has criticized these bans, calling them ideologically based and arguing that they prevent the country from capitalizing on significant economic opportunities, including job creation and tax revenue. He emphasized that uranium is a resource where Australia has a natural advantage and should be leveraging this to meet global demand. In contrast, a spokesperson for Federal Resources Minister Madeleine King highlighted that decisions regarding uranium mining regulations are primarily the responsibility of state governments, effectively deflecting the issue away from the federal level. Jonathan Fisher, CEO of Cauldron Energy Inc., voiced strong opposition to the bans, particularly in mining-centric states like Western Australia, calling them nonsensical and warning that Australia risks missing out on the economic benefits of the rapidly growing global demand for uranium. As the world moves towards decarbonization and energy independence, the question looms: will Australia seize this critical opportunity to leverage its vast uranium resources, or will it allow these restrictions to hinder its potential in the global market? Reactor construction is gaining significant momentum globally, with China leading the charge. This week, China began building 2 more reactors, bringing its total to 26 under construction, the highest in the world. Globally, 64 reactors are now under construction, up from 59 in 2022, indicating a broader acceleration in nuclear development. India, with 7 reactors currently being built, is the second most active country in this sector. Notably, India has opened up reactor construction to private companies, a move that includes major players like Tata Group, which plans to invest an additional $2.4 billion in nuclear projects, including small modular reactors. France, while currently constructing only 1 reactor, has approved 14 more. French energy company EDF aims to significantly reduce reactor construction time from 15 to 6 years, signaling a more aggressive approach to nuclear expansion. This surge in reactor building is a clear signal of growing demand for uranium, which could positively impact uranium prices and related equities. Cameco, a major Canadian uranium producer, reported a 157% increase in Q2 earnings, rising to $36 million Canadian or $26 million US, driven by higher uranium oxide prices and growing demand for nuclear energy. Recent U.S. policy developments, including the ADVANCE Act and the Department of Energy's funding for small modular reactors, are expected to boost Cameco's North American business in the long term. The ADVANCE Act aims to streamline the Nuclear Regulatory Commission's licensing process, potentially speeding up the deployment of new reactor technologies. Despite the rise in prices, long-term contracting volumes have dropped significantly compared to 2023, as U.S. utilities wait for clarity on the impact of Russian uranium import bans. Global spot prices for uranium oxide have fluctuated, ending June 2024 at $84.25 a pound, down from earlier in the year, but up sharply from $56.10 a pound in June of 2023. Long-term contract prices reached their highest inflation-adjusted levels since 2012 at $79.50 a pound. Cameco's revenue increased by 24% to $598 million Canadian, or $433 million US, supported by tight supplies and expectations of higher future demand. The company highlights nuclear energy's critical role in reducing carbon emissions and providing reliable baseload power, especially as fossil fuel plants retire and energy-intensive industries seek to lower their carbon footprint. And that wraps up your Uranium Spotlight coverage for this week. For more news and events from the world of uranium, please tune in next week to Uranium Spotlight.
You've been listening to Uranium Spotlight, your weekly podcast dedicated to delivering the latest news and events shaping the uranium fuel market and its critical role in the global energy landscape. Brought to you by PurePoint Uranium Group. PurePoint actively operates a portfolio of advanced uranium projects in the world's richest uranium district and has established partnerships with some of the largest uranium suppliers worldwide. While our passion for this subject is undeniable, it's essential to clarify that the information presented here is not investment advice. Instead, our goal is to offer an unbiased and comprehensive review of recent events that could impact uranium prices. Join us again next Tuesday for Uranium Spotlight.